Very much. Let's turn to Ari Wald, head of technical analysis at Oppenheimer. Ari, you think rates are finding a floor here? Tell us what you see the bond market telling us.
Sure. Yeah, I think rates are finding a floor, and I think that's going to be the action going forward. The stability in the bond market that really should support equity prices looking ahead against this not too hot, not too cold backdrop. I think generally, not being an economist, I don't think the Fed is in a hurry to cut interest rates for the very reason that
Seems not, yeah.
Yeah, they want to avoid that 1970 scenario, which when they did cut too quickly. So I think the market is rallying and with those expectations, and I think that's historically consistent. And be careful what you ask for. I think by the time they actually do cut rates, we could be closer to that market top.
Let's talk about your view is that the S&P is undervalued below 5,400. We're basically at 5,000 now, 49.90. Where do you think the S&P heads from here? Up?
We like that 5,400 level there by year end. So, yeah, round number 5,000. I think we achieved 5,000 in a very bullish manner. The index's weekly RSI has reached a level of 73 that often discussed as being
What is RSI,
overbought.
for those who don't know? Like
it's
me?
a measure of the speed of price. Now, a lot of commentators come here to talk about it being overbought. It's really just indicating that price is accelerating. We found that only 35% of major tops have occurred with an RSI above 70. That number drops to 4% when you're above 75. So the higher the RSI, the less likely we get a market top. Year two of the bull market underway. 70% of cycles have reached the 2-year anniversary. That's why we think it continues through year end. 5,400 would be on par with typical year two
historic
gains
in a second year of a bull market. Why don't we move on to a couple of individual stocks that I know you want to share your views on, beginning with Take-Two out after the bell.
The key with Take-Two is really the leadership that we've seen in the growth factor overall. It's been a broad-based theme. It's large cap growth, mid cap growth, small cap growth. And Take-Two, what's notable about the chart, it is one of the broadening list of stocks that continue to move higher above the December high. A lot has been made about moderating market breadth. Take-Two has bucked that trend. It's continued to push higher. It continues to show relative strength. It continues to retrace the stark losses suffered between 2021 and 2022, and we think that continues over the coming months.
Affirm is your next on your list. This has been a very hot stock.
It's been hot. The whole industry's been hot.
The whole industry's been hot. Do you think it stays that way?
Yeah, I like those broad-based themes. FinTech overall. Here's a stock that
more than doubling in the past 3 months.
It really surged in the fourth quarter, and what it did, it moved above its peak level from August of 2022. It's been consolidating and working off those excesses by going sideways above that breakout. Very often, former resistance becomes support, and we think that larger breakout continues looking ahead.
Let's move on to First Energy and get your thoughts there. What are the headwinds there? So you got to buy on Affirm, by the way. So
we're long. Yep. Buy the growth names, Take-Two, and Affirm, and sell defensives. We are bearish on defensive sectors here. I think it really represents utilities, counter-cyclical, defensive overall. All these stocks in the sector look like that. Multi-year relative lows. First Energy failing at its bearish 200-day average. We see that as a potential resumption of the stock's ongoing downtrend.
And this HB6 scandal, explain what that is. You think it's getting past that? The company's getting past that?
Not a utility analyst. I don't cover the stock. I'm just looking at the themes across the board. Very weak relative action.
All right. So you got to sell on that one.
We do.
Yeah. All right.
Underweight sector.
Ari, thanks very much. Appreciate it. Good to have you with us.